All right, guys. Today we are going to also be this. So this is a very wonderful one, and it's a high probability trade. I'm going to give you some reason why it's a high probability trade. So let's start from the fundamental instead of the technical. So you see this value line. This shows us where the market is going. It leads the market. It tells you what the market maker are doing. If they've already started selling, you will know. So the market move, the value line, this value line, it moves before the market. So when you see this drop, all right, in the value line, it means that we need the market to make an higher high, then drop. So when the markets make an higher high, this sounds like an entry, though I've already made one entry here. So this sounds like an entry. So this is the commercial entry, the market makers entry. This is where the institutions, this is where they enter their trade. This is where they begin the trades. Now, when this happens, there's going to be a re-entry, where we are going to have the ICT and the rest, for the breaker blocks and the rest, where they're going to enter. And that is exactly what I want to show you. This is for the high level, the professionals, all right? But the ICT are also going to, and the others are also going to enter based on the breaker block. Now, we can see the dump on this value line. This shows us that, okay, sellers are already in the game and the market consolidate a little bit before selling. Now, if you look at this candle here, you can see this yellowish bearish candle, all right? It's a bearish candle and it's yellow, all right? So the ICT guys are going to call it a fair value gap, all right? So it's not every candle that drop like this that is a fair value gap. But if a candle has a high volume, a high volume, so it can be considered as a fair value gap. You understand? So the theory is it can be filled 50% or 100%. All right, that's the theory. But we need to also do some other due diligence before we know if it's going to be 50% or 100%. All right, but we know that this area here is going to be respected. All right, this area here is going to be respected. So because there is a high volume on this particular candle, so I don't think that the market, we just boom through and, take out these high sellers here, these professional sellers here, and it's going to take them out and, it's going to go up. I don't believe so. So I believe that this one here is going to be respected. And once it is respected, it's going to want to take out this low. So though it's going to be a long-time trade, it's going to be a long-time GPPCH is going to be a long-time trade, and we'll swim to hit altogether. So I'm going to make my second entry here. I'm going to make my second entry. I already have my first entry here, and I'm going to make my second entry using this particular bearish candle. All right. So as I said, it's not every candle here it's not every bearish candle that has high volume. So there are some candles that have high volume, there are some that don't. All right. So when a candle have high volume, it is going to consider as a major support or a major resistance, just like what we have here. So you can also use it as a as a, let me say, as an order block. You understand? Just like what we have here. So you can see that this high volume bullish candle here, when the market retraced back to it, the market pushed up. All right, the market pushed up. So we can use it as a support. You understand? Because we know there's a lot of buyers inside this candle, not here, but here inside this candle. Now we also have a lot of sellers, on this candle. So that is one of the reasons why we believe that the market is going to sell from this particular candle. Now, where are we looking at? Well, what's our target? It's going to be a long trade. As I said earlier, it's going to be a very long trade. You understand? So we'll be looking at let's just say from here, we'll be looking at this as the first target. All right, this is over 270 pips, as the first target. All right. though we are going to have a break here over 190 pips, a break, then we'll be looking at 260 or 270 pips. So in short, it's just going to be a long one. All right, it's going to be a long one. So it might even be more than that, but let's see how far we can go. For now, just chill, and I'm going to make the second entry. Once I'm done with that, I will come up again. All right, guys, welcome back. And as we can see, as we have predicted, exactly that's what is happening. And you can see this area, we discussed about this fair value gap that is around here. I told you that this a high volume candle, it's not everyone, it's not everything that's going to be respected, but this exactly is going to be respected. And I said we are going to be selling around here. And also, we discussed about this. So I sold around here, and I also have another position somewhere around here. So I have another position there. So, and so far so good. The market has been moving in favor. So right now we are sitting on over 100 pips on GBP/CHF, which is something that is very, very good. Something very, very, very nice. Okay. All right. So let me show you. All right, so this is it now. And as you can see, we are sitting on something that is very nice, as in very useful. We can see that we sold from here, and we also sold some here. You can see this particular bearish candle here. So we sold here, and we also sold here. So this is something nice, highly, highly, highly predetermined setup. All right, so that will be all for now. Thanks, guys.